You ever wonder how wealth is really built in America? I mean, it's not just about working harder, right? It's about understanding the systems, the actual rules of the game. And today, we are going to pull back the curtain on the blueprint that connects, believe it or not, everything from your little side hustle to those massive glass towers that dominate our city skylines. So let's get into it. You know, the source material for this kicks off with this really powerful idea. It's basically saying that whether you're talking about the smallest earnings or the biggest fortunes, wealth is almost always the result of a system, a design. It's not some happy accident, it's a formula. Okay, so here's the big question we're going to unpack today. On one side, you have the gig hustle, turning your car into a taxi with Uber. And on the other, you have a billion-dollar gleaming real estate project. I mean, what on earth could those two things possibly have in common? Well, as it turns out, a whole lot more than you'd think. All right, let's start on familiar ground, right? The personal scale. This is where most of us live and breathe, generating income in today's economy, a lot of the time just using our phones. I mean, think about it. Digital platforms like Uber and Airbnb completely changed the game. All of a sudden, assets that were just sitting there, doing nothing, your car in the driveway, that spare room, they could be turned into real, active income streams. This was way more than just a new way to earn a few bucks. It was a huge mindset shift that basically made earning money accessible to almost everyone. And it wasn't just about our physical stuff either. Technology did the same thing for the stock market. It threw the doors wide open. Something that used to feel super complex and kind of walled off was suddenly accessible to anyone with a smartphone. This brought millions of new investors into the game and totally changed the culture around who even gets to be an investor. Now, what's really key here is the strategy behind all this. It's not about trying to get rich overnight with some crazy risky trades. No, the real power, the thing that actually works, is in the broad market. Just look at the S&P 500. It has historically delivered these steady, pretty reliable returns over the long haul. And that right there, that's the foundation of patient wealth building. It's this idea that sometimes the smartest move you can make is also the simplest. So this brings us to the first crucial piece of the blueprint. The most accessible kind of easy money isn't really about being easy, it's about being automated. It's all about setting up systems like your 401k or just regular investments into an index fund that just work for you in the background. They're powered by time and, of course, that incredible, almost magical force of compounding. Okay, so now we're going to make a huge jump. We're going from the personal scale all the way up to the macro scale. We're talking about the world of multi-million, even billion-dollar luxury skyscrapers.
So the next time you look up and see one of those gleaming glass towers, I want you to see something different. Don't just think of it as a building with a bunch of apartments. See it for what it really is, a meticulously engineered financial machine designed from the ground up with one goal in mind, to generate massive, massive profits.
And here's the secret to how they do it without putting up all their own cash. Developers use something called a capital stack. Just think of it like layering a cake. They stack different types of funding from all sorts of places: banks, private investors, huge institutions. This is just a super powerful form of leverage that lets them get the project built while keeping their own financial risk as low as possible. The whole thing really follows a clear, repeatable formula. Step 1, find the right location with growth. Step 2, stack the capital, just like we talked about, to reduce your risk. Step 3, add what they call revenue multipliers. Things like fancy rooftop pools that aren't just for show, they actually let you charge higher rent. And finally, step 4, focus on boosting one single critical number that makes the building's value explode. And that secret number? It's called net operating income, or NOI for short. It's basically the pure profit a building brings in after you pay all the bills to run it, but before you pay the mortgage. Literally everything a developer does, from putting in a high-end gym to adding a goofy little pet washing station, it's all designed to push this one single number higher. Okay, so let's see exactly how this works with some simple numbers. Let's say a building has an NOI of $5 million. And in that city, the going rate for this kind of building, they call it a cap rate, is 5%. Well, you do the math, and that building is valued at a cool $100 million. Okay, but now here comes the magic trick. By adding those nice amenities and tweaking the rents, the developer manages to increase the NOI by just $1 million, getting it up to $6 million. The cap rate in the market hasn't changed,
But look what happens to the value of the building. It jumps by $20 million. That is pure engineered profit, and they didn't have to build a single new apartment to get it.
So we've looked at the small scale and the massive scale. Now it's time to connect the dots and show you the underlying blueprint that ties this whole thing together.
And this chart just lays it out so perfectly. Take a look. The principles are pretty much identical. Sure, the asset is different, an index fund versus a giant skyscraper, and the income is dividends versus rent. But the core strategies? Using other people's money for leverage, optimizing your asset to make it produce more income, it is exactly the same playbook. The only thing that changes is the scale.
So what's the big takeaway here? What does all this mean? It's pretty simple, really. The system for building wealth isn't random at all. It's built on a very clear, very repeatable set of rules. Here it is, the American Money Blueprint, boiled down to a single sentence. It doesn't matter if you're buying a few shares of stock, renting out a room, or building a skyscraper. The formula is always the same. Acquire an asset that produces income, figure out how to optimize it to produce more income, and then let time and compounding do the rest of the work for you. And this really leaves us with a final, pretty empowering thought. Look, understanding this blueprint, that's the first step. These principles work on any scale, from a tiny side project all the way up to a massive enterprise. The system is out there, it's available for anyone to use. So the real question is, now that you know the rules, what are you going to build?